John Mccarthy is the name. You probably may have heard of me before, maybe not. But I work in the practice environment. I've been an accountant for over 25 years. I worked in the UK. I was telling Paul I worked in Milton Keynes for a number of years. And I'm aware of the UK environment fairly well. I work over there currently at the moment with clients and accountants. This talk I'm giving on debt collection has been very popular. I've delivered it a number of times. And it's really all about, I suppose, two things. Confidence, number one, the confidence that you deserve to get paid because you've done the work. And secondly, body language, which goes with that. I have learned some hard stories myself when I ran my own practice in a previous life. And I'll tell you a story during the course of this session on a client that sacked me. You can learn from situations like that. A client that sacked me, and I went and collected the full fee. So that wouldn't have happened probably in an ongoing relationship because I'd been giving this client discounts. So one of the messages I give you, if you're giving a client a discount, and we're in a recession, sometimes we have to give discounts. If you're giving a client a discount, don't make it a secret. Let them know about it. All right, so we'll explain that a bit more as we go ahead. Okay, so what are we talking about? We're really talking about getting your salary paid because yesterday was the end of the month. Hopefully, if you've got staff, employees, you've hopefully paid their salaries. There are some accountancy firms at the moment that are struggling to pay their staff salaries because of cash flow difficulties. If they manage to pay the staff salaries, they're having difficulty paying the tax and PRSI. Which is crazy because obviously you're going to get into trouble with the revenue commissioners and that's not a great place to be. You get a debt registered by the revenue against you, then that gets in the press and the institutes are reading the press every day and they will take your practice license away if you get a debt registered. So you can't afford to run into trouble like that, and some practices are very close to the wind in that area. So debt collection is very serious, obviously very serious area. We're not running charities, we're running a business. We are a regulated profession, yet it is okay, it is the law for anybody to call themselves an accountant. In the UK and Ireland, you don't have to be licensed, which is nuts. Now, so we're told, there was a survey done by the Small Firms Association in January, and we'll come to the results of that in a moment. According to that survey, very, very few businesses actually charge interest. I think it's an Irish thing. We don't think it's socially acceptable, even though it's the law, to charge interest. But there is new legislation coming on this in March. So this is the small firm survey. They found, interestingly, you'll see this point here, the average payment period is still very high at 62 days. Now, I don't know who answered this survey, but I think that's really, if that's true, that's a lot less than I see out there. I see more like beyond 90 days and even up to 6 months or even longer. I don't know what the audience, what do you find generally as an audience? Is 62 what you see or more? More, yeah. So let's have a look at what it takes to get the cash then, rather than the interest, which is legally the charging bit, okay? So we're really talking about issues like accounts receivable, your debtors, asset management. Debtors is an asset. It's probably one of your most important assets because it's cash flow, it's working capital for your business, for your client's business. Asset recovery, asset acceptance, lots of different titles on that there. Moving on, well, what are we talking about? Well, we're really talking about, like I just said, getting your salary. It's your salary, your employees. I can imagine what would be their reaction if you didn't pay them late yesterday or at the end of the month. I'm sure there'd probably be some sort of a strike of some sort, or certainly very bad morale. And you're probably not aware of RTI. RTI is real-time information which the Inland Revenue in the UK are bringing in on the 6th of April. If the Inland Revenue here in Ireland hear about it, well, they've got a speaker coming shortly, I'm sure they have heard about it. They will definitely bring it in, right? It's brilliant from their point of view because they get the cash quicker. What RTI does is it forces you to file your P30 online and nowhere else, including every employee's passport number, right? That's to catch illegal immigrants. So that will come in Ireland without a doubt. And it's going to force everybody who's on paper still to go electronic because it won't be accepted in any other way. The other crazy thing the revenue in UK are doing is they're forcing it's a small employers to start first, and they're leaving themselves, the Inland Revenue themselves, one of the biggest employers, last. So they're going to create all the hassle for the small people. I was in Scotland at a conference recently, and they were saying there that sheep farmers up on the top of the highlands will have to come down from the mountain to the local village hall and log on to an internet site for the first time in their lives probably and put their employees on there and pay their tax monthly. So they won't be a P30 anymore. It'll be live tax. So it's every week if you're paying your employees weekly, or every month if they're paid monthly. So it's live on the button. And you can imagine it's going to bounce back if you got one digit on the passport number wrong. or whatever. So that's accountants in the UK are really rubbing their hands with glee because it's going to create lots of work for them. Well, we hope it does. So, but I bet the same will come here. So issues like that, you help clients overcome these milestones. You save them money. I mean, many of the time you file their returns on time, you file their accounts at the company's office, you file their tax returns, you avoid surcharges. But how often do you remind them of this? And what most accountants are actually doing at the moment is they're going out to meet clients face to face, especially the ones that owe them the money. It's much more effective than trying to send emails, trying to send telephone calls that get ignored or letters in the post. You'll go through all that routine, but if you really want the money, go out in person and sit with them, have a coffee and discuss it and come to an arrangement. That's much more effective. The client knows they owe you the money. It's just something they want to avoid. They just haven't got the money at the moment, or you're not in priority order. So to get in priority order, get out there, shake the hands and meet them and come to some arrangement. What's your reaction if your salary wasn't going to get paid? You wouldn't be too pleased, would you? Your staff certainly wouldn't. If someone else, you go to someone else, you go to a doctor, you go to an optician to get your eyes tested or whatever, you do expect to have to pay them. So your clients might say, oh, well, give us a discount, or sure, give us another 6 months credit. They know they're going to have to pay, but they're just using this opportunity to kind of spread the cash, which is very thin, to spread it a little bit wider and make it last that little bit longer. So how can you both balance that delicate balancing act of caring for the client without seemingly being overly aggressive and demanding the money, and yet come out of that feeling, yes, I got some money, my client's happy, and we can maintain the relationship? Because everybody is under pressure and under stress because of the recession, and it's putting your relationships like that under pressure. So it's important to know how to manage that delicate balancing act. If you ever thought about it, when do you think, and this is a question for you in the audience now, when do you think a client's or a customer's need is at its greatest? In terms of negotiating your fee and all of that, when do you think the customer's need is at its maximum?
Under pressure from their banks or something.
Yeah, okay, that's certainly correct.
Deadlines.
When they've got deadlines. But is there a moment in time? The start of the job, exactly. That's the real answer I was looking for. But yes, you're right, deadlines as well. Of course, they all do that. But so you're about to start the job. So that horrible letter arrives from the inspector of taxes with the harp on it, and the client opens it and goes, oh no, a revenue inspection is happening. So that is the moment of your maximum negotiating leverage. Now, a lot of accountants, because our training is unfortunately totally technical, we're trained to be technicians, sorry to insult you, but we're all technicians. We're just good at tax, accounting, auditing, whatever, financial reporting. But when it comes to pricing, well, we learn from our mistakes, and sometimes the mistakes can be quite expensive. So one of the most important lessons I've learned in life is that your maximum negotiating leverage is at the start. That's the time to negotiate not only the price, but also when you're going to get paid. Unfortunately, because we're technicians, many of us launch into fixing the problem straight away, because we know how to, and we like to show off, and we say to the client, oh, I've dealt with this before. Another client had a similar problem like this. Not many accountants can deal with this one. Aren't we brilliant? And away we go, and we're practically finished. And we go, oops, actually I've got 43 days on the clock, or whatever it took. Would you like to pay me 5,000 or whatever? And the client's going, what? That's the first I ever heard of a price in this situation. And meanwhile, your maximum negotiating leverage is gone, because you've just sorted out the inland revenue or the tax investigation. That's now over, the deal has been done, and now you're coming to talk about the price, which is a little bit late. And you're only talking about the price, you're not even talking about the collection yet. So that's going to be even further down the road. So no wonder cash collection is pretty appalling. When should you agree? Of course, at the beginning, and you should agree the price. A lot of accountants extremely nervous about that, because we tend to be cautious individuals. We go, oh my goodness, what if I get the price wrong? How do I price a revenue investigation job or a revenue audit assignment? One accountant I was speaking to recently said the way that they do it is they have a history of the last, say, 3 to 5 investigation cases that they've been involved in, and they work out the average price of those, and they say to the client, look, the average cost of a revenue investigation in our office is 3,000 or 5,000, whatever the number is that you have, and you've got history to back it up. And you say, look, that's the price we'll need to charge you. We don't know how long your case is going to take, and we'd like a third of that up front, please, before we start. So we get some cash going. The client's need is at the greatest, so they ought to pay us some money now. The payment intervals, you need to agree that. Is it going to be weekly? Is it going to be monthly? What type of installments will it be? And so on. And of course, you're conscious of the next bill that's coming up. You probably don't want to agree a payment interval that's longer than 11 months. Depending on the size of the bill, you may have no choice only to go beyond 11 months, but then you need to build in the next bill into the payment period as well. So you have to be conscious of everything that's going on around. Communication techniques is the next most important thing. So in terms of asking for it, we need to be assertive, but we need to be clear about the service we've delivered. So if you're offering a client a service that's very tight on price, hasn't got much scope for the kitchen sink being thrown in, you need to make that very clear, not only to the client, but to your staff. Staff can get sucked in because they may be listening to a sob story down the phone, such and such, my bookkeeper has gone missing, or the records are shredded, can you help me, whatever it is. And your staff may get sucked into a situation where they're clocking chargeable time on a client that already owes a ton of money. So it can be very important that communication is correct and the language that's used by you and your staff is appropriate. So the wrong way to do it obviously is give me money, right? Or, sure, I've seen your books, you're loaded, right? And maybe they are, they're paying somebody else, not you. I was thinking, this is the apologetic one. Oh, you might consider, I was hoping, since I've done the work, if you have it, well, if possible, so you can just get overly apologetic. But a better way, surely, a better way is your overall attitude. And a lot of accountants are discovering that going out in person, depending on the size of the fee, obviously, but in person is obviously much better. So attitude in terms of arriving at the client's premises, agreeing a cup of coffee, a chat, and listening to what they have to say. And the outcome of it, hopefully, is some form of written agreement. We'll do something, 50 euros a month, 100 a month, something to eat away at whatever the mountain of debt is. Hopefully it isn't a mountain, but to do something. Commitment, of course, as well. So you need to be persistent. If you tell the client, look, I'm listening to what you're saying, you haven't got the cash today, but you might have it next Wednesday, I'll phone you next Wednesday at 9 o'clock. So you make a diary note. Clients hate this. They hate accountants who keep their promises, right? So if you make an appointment or you say, I'm going to phone you, or a member of staff will phone you at 9 o'clock next Wednesday, you make sure on the dot of 9 o'clock you're ready, the phone rings. Not 9:05, not after lunch. You make sure that you phone them at that appointed time. They still don't have the money, you say, we'll phone you again tomorrow at 9 o'clock, and you keep that up, and you keep phoning exactly at the time. That doesn't have to be 9 o'clock every time, but you keep phoning at the appointed time. Eventually they'll go, oh my goodness, I better get rid of this guy, and they will pay you. So persistence and perseverance pays. The accountants I talk to that don't get paid often don't send statements. They're not sending monthly statements. So it's important to be efficient with the collection process. Send a statement at the end of the month that reminds them, rankles their conscience again. Oh my goodness, I do owe John that money, and so on. And again the following month, whatever, and then follow it up in person. So the commitment is important. Reciprocation, that's about sitting down with them, having a discussion, having a conversation, showing you're reasonable, you're willing to negotiate. It's not that it's hard and fast that they have to have all the money now. But you're like any other supplier, you're there on their list, but you're moving up the pecking order straight away simply because you go and visit them in person. So that's important. The power of language. This particular presentation, I did it with a psychologist there a couple of years ago when we were doing the SAGE talk. And the word obviously, psychologists have studied language very closely, and the word obviously is very, very persuasive. When you say to the client, well, obviously, we've done the accounts and they've gone to the revenue on time, they can't argue with that. When you use the word obviously, you're stating the obvious, and they would be ridiculous to disagree. Secondly, I need, again, it's important, you need the cash because I have staff to pay, I've got wages, I've got overheads, etc., and so on, I've got license fees to pay and so on like that. So again, those words are very important. And then you follow that with the word because. I need this because I need to be able to give service to other clients, and I need to be in business so that I can give you service again next year. What if I don't get paid? I'm going to go out of business and I won't be there to serve you. You're going to have to find another accountant. So again, it's brought home to them in a personal fashion like that. I think most clients listen. Okay, so showing your care, again, revealing your worth in terms of a special customer discount. This is a once-off discount, hopefully never to be a repeated situation. And that can actually help to win them over. Most accountants' letters I see talk about, well, fees will be charged in accordance with our charge-out rates, blah, 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 and there's no actual figure, right? If you want to get paid, you need a figure. You need to put at least an estimation in there, and you can say this figure is estimated on such and such of hours, such and such a time deadline, etc. If this changes, we will let you know, right? So now the client knows how much they got a budget for. We would, and then another paragraph saying we would like this paid 1/3 on the commencement of the assignment, or we'd like this paid halfway through, or we'd like some of this paid when we present you with the draft accounts. Many accountants now send the full bill with the draft accounts because the client spends most of their time looking at the draft accounts. They won't spend any time looking at the final accounts because they're quite boring, actually. So they spend more time on the draft and see what they can change. So send the invoice then. So a tighter credit policy would look something like this, having a detailed background check, carrying out some references, a comprehensive credit application form, strict credit terms of 30 days. Terms of business on your website, there's no reason why you couldn't have the relevant clauses from your engagement letter on your website as well, so that prospective clients can see that it's normal stuff and it's not totally unusual. Payments by direct debit, why not encourage that? I don't know, how many people here get clients to pay by direct debit? Okay, not many. Some do, excellent. Maybe room for encouragement there, or for instance, standing order perhaps is another way. If you go down the standing order route though, one of the caveats I would say is that it should be over 10 months and not 12, because you have 10-month standing orders and then you've got 2 months to change the price. I've seen accountants that have 12-month standing orders rolling forward, and it's very difficult to change the figure because it just keeps rolling automatically. It's also very difficult to tell when the work has stopped, because if you've got 10 months, you know how much the price was for. 2 months pass by, you can re-engineer the price, decide the scope of the assignment, and start a fresh standing order. Whereas when they roll on, they just tend to everything gets sucked in the kitchen sink, the mother-in-law's tax return is fired in, and before you know it, you're doing double the work for the same price. So it's important to be careful with standing orders. Have a formal litigation policy, so do obviously sue in the end if you have to. When I actually sold my practice at one stage before I moved on to another part of my career, I actually ended up having to sue a client for the first time. Now this client was one of the clients that had told me, John, you will be top of my creditors ledger. You're the most important person in my life. And I was going, okay, that's brilliant to know that. And of course he totally then didn't live up to that at all. When I did eventually sue him on selling my practice, it took me 2 years for the legal work to work its way through the system. So you got to be fairly persistent. It took me 2 years to get paid, but it did in the end. But sometimes it's not pleasant, but you got to go down that route perhaps. Invoicing then, check the accuracy before sending. How many people here actually invoice by email, electronic invoicing? Okay, again, that's totally legitimate. You need to do that. I have a supplier in my business who invoices me by email, and in the email is a link to their PayPal site. So the invoice and the payment is all nicely synchronized. You need to do things like that. Why invoice by snail mail? You invoice by snail mail, you only deserve to get paid by snail mail, which is slow and long and laborious. So you're allowed to electronically invoice since the year 2000. Issue the invoice within 24 hours of delivery. Email the invoice. Are the codes correct? The invoice numbers. Make sure all these basics are correct. There's an awful lot of steps in getting paid, but if those steps are right, you encourage getting paid much more easily. Again, pursue the claim through the courts if necessary. Use your solicitors and debt collection agents. In terms of management, set a timescale for handling and resolving disputes. One of the key issues I see in practices that are good at collecting money is they have a meeting once a week with their staff, with their key management staff, and they would reinforce to the management staff lots of things during that meeting, but one of the issues that's normally dealt with is the volume of debts and the cash that needs to be collected and who it's going to be collected from. So they set targets for each individual member of staff and get them on the phone to help collect the debts. Having regular meetings with your sales team, with your staff. Staff should be trained to 4 things staff need to be very good at. First, listening. Secondly, questioning. Thirdly, persuading. So questioning the client, why is it not possible? Persuading them that it is possible. You're paying everybody else, so why not us? Put us in there in the list. And lastly, negotiate, and that may be where the discount has to come in, but you wouldn't necessarily have to give that straight away. In terms of payment negotiations, we saw there are only 2% of Irish businesses charge interest. Well, the new legislation that's going to come in March is going to allow public authorities, they're going to be forced to pay now between 30 and 60 days, and everybody else has to pay within 60 days. Okay, so remember, it's your salary. You need to ask for it. It's not a big deal. All right, so that's me done. Thanks.